Hello, my presentation is called Unlocking Carbon Finance for Biochar Projects Around the World. But before I get started, I just want to thank the Sonoma Biochar Initiative and Raymond and all of his team for all the incredible hard work that they've put into organising this event. Secondly, I want to say that this is a pre-recording of my presentation, which I've made from my home office in Bristol in the United Kingdom. So I do apologise in advance if it sounds a little bit like I'm reading the news. So my name is Simon Manley. I'm the founder director of Biochar Works. I've been working in the biochar sector for over 10 years now. I'm the former CEO of Carbon Gold, one of the longest running biochar companies in the world, and I'm a member of the IBI's newly formed Carbon Committee. Biochar burst onto the environmental scene about 15 years ago, with commentators excited about its potential to deliver sustainable agriculture and carbon reduction outcomes. However, since then, adoption has been slow, principally because its primary benefits have failed to get commercial traction. In the case of its role in sustainable agriculture, these issues are now being resolved. The costs of production have been high, with sales prices ranging between £600 and £1,000 per tonne historically. There were few markets that could accommodate this kind of price tag. This is now being addressed with the emergence of large volume sources of high quality, low cost biochar. The proof of biochar's value as a soil amendment took time to emerge. It didn't work in every trial, in every soil, and with every crop. However, there is enough research and commercial testimonial out there now that irrefutably demonstrates the important role it can play in restoring degraded, infertile soils. In fact, over 300 peer-reviewed academic reports are published every year on the various benefits of biochar. For a long time, it was generally accepted that the application rate of 10 tonnes per hectare was necessary for biochar to deliver. Application techniques and biochar formulations have now evolved to a point where this is no longer necessary. The argument behind biochar's role as a carbon sink was always clear and persuasive. Processing biomass to biochar breaks the carbon cycle and allows for long-term carbon storage in the soil, or in other applications that are fast emerging and covered in other presentations. 1 tonne of biochar in most cases is the equivalent to 3 tonnes of CO2 removed from the atmosphere. However, where this argument fell down historically was on the issue of permanence. The lack of evidence on this point meant methodologies did not get approved and there was no access to carbon finance to support the growth of the sector. The good news is this is about to change due to a number of factors which I'm going to run through now. Firstly, recent years have seen a shift in climate science to show that we've already loaded the atmosphere with enough CO2 to take us over our now target temperature rise of 1.5 degrees centigrade. The UN Environment Programme's 2019 Emissions Gap Report showed that if all countries meet their climate action plans, so-called NDCs, we should still be 32 billion tonnes over where we need to be to meet the Paris Agreement's 1.5 degrees centigrade temperature rise target. The search for technologies that remove carbon from the atmosphere has never been more urgent. The second factor is the recent mobilisation of governments and the private sector around this new imperative. The race is on to net zero, to decarbonise and de-risk infrastructure, supply chains and investment portfolios. Big tech is leading the way with high-profile commitments from Microsoft, Apple and Facebook. These companies have the will and the funds to invest in innovative new ways to decarbonise the global economy. In May 2020, the World Bank Group published the statistics you can see at the bottom of this slide. More and more organisations in the public and private sector are now setting net zero targets. A key part of nearly all net zero strategies involves supporting carbon removal activities. The next significant change is that at last biochar can now play a credible role in this new movement. Biochar is now recognised as a negative emissions technology by organisations such as the IPCC, the UK's Royal Society, the World Bank, the Royal Academy of Engineering, and the US-based National Academies of Sciences. All of these organisations have published reports that recognise the carbon removal function of biochar. Next, more data has emerged to address the issue of permanence. The IPCC published a report last year which offers calculations for the amount of organic carbon found in biochars defined by feedstock type, as well as how much of that carbon remains after a time period of 100 years. By the way, it's 89% for high temperature biochars, 80% for medium temperature biochars, and 65% for low temperature biochars. Around the same time, the European Biochar Certificate, or EBC, published evidence to suggest a 0.3% per annum degradation rate of organic carbon in biochar in the soil in the first 100 years. What that basically means is, if you put some biochar into the soil, 74% of the carbon remains at the end of a 100-year period. Some view this as a conservative but safe estimate. To support the evidence base behind biochar's carbon removal function, its sequestration potential has been modelled. Paul Hawkins' Project Drawdown calculates it to be between 2.2 and 4.4 gigatons of CO2 by 2050. A gigaton is 1 billion tons, by the way. Jim Amonette from Pacific Northwest National Laboratory concurs and states that if conversion technology can be improved, then this figure rises to 20 gigatons within the same time frame. So, the shift in climate science to focus on the need for carbon removal, the mobilisation around net zero targets, and the recognition of biochar as a negative emissions technology all add up to the fact that there has never been a better opportunity to establish biochar as a carbon asset and unlock the flow of carbon finance to grow the sector. In response, small-scale trading platforms have started to emerge. Puro.earth and Carbon Future are two early examples, both based in Europe. These are a great start. However, to maximise the sequestration potential of biochar and realise this significant funding opportunity, biochar has to be a tradable asset on one of the mainstream carbon markets. The International Carbon Reduction and Offset Alliance, ICROA as it's known, creates standards for best practice in the voluntary market. The organisation publishes a list of approved markets, and these are listed here. Now, these are the markets where the majority of the 104 million tonnes of carbon credits were traded in the voluntary sector in 2019. The biggest of these is the Verified Carbon Standard, or VCS. This table, published by the World Bank Group, shows the volume of carbon credits issued by projects from 2015 to 2019 by the different trading markets. The VCS, shown here in light blue, is now the market with the highest volume of carbon credit issuances in the world. This growth is partly fueled by the role of voluntary offset credits in net zero strategies. Now, a large part of that growth is down to the increase in demand for credits coming from the project category agriculture, forestry and other land use, abbreviated to AFOLU, which you can see from the graph at the bottom has been the most popular project type since 2016. Biochar fits into the AFOLU category. You'll also hear of these projects described as natural climate solutions and nature-based solutions. Nature-based solutions are favoured by credit purchasers since they deliver cost-effective carbon reductions and additional co-benefits. Across all voluntary carbon markets, the forestry and land use segment transacted credits worth $160 million in 2019. That's the highest value segment by a factor of 2.6. The total transacted market value across all segments was $284 million in 2019. You may have noticed from the previous slide that the average unit price for an AFOLU project carbon credit was $4.3 US. This is still really low, however prices are on the rise. The World Bank Group again states that it is estimated the price of a tonne of CO2 must steadily rise to $100 by 2030 to meet the goals of the Paris Agreement. A lot rides on the outcomes of COP26, now tabled to take place in 2021 in Scotland. Looking at the second block of text in this slide, you'll see some companies are able to take matters into their own hands and use internal carbon pricing to start this upward trend. Approximately 1,600 companies do so or plan to at the last count in 2019. On the 15th of September this year, the reinsurance company Swiss Re declared an internal carbon levy of $100 per tonne of CO2. And in its 2019 sustainability report, the company cites biochar as one of the ways it will meet its carbon reduction targets and support the nascent carbon removals market. So what could this mean for the biochar sector? Well, securing approval for a biochar methodology by the internationally recognised ACROA-backed carbon trading standards will open up access to a market segment currently worth $160 million per annum. But in terms of market value, this really is just the beginning. On September the 10th this year, a host of top figures from business, finance and academia, led by former Bank of England Governor Mark Carney, announced a global task force to accelerate the development of voluntary carbon markets across the private sector ahead of an anticipated surge in demand for CO2 offsets as the net zero transition gathers pace. In order to meet growing demand for offsets, current private sector carbon markets are going to have to grow by at least 15-fold on today's levels, potentially reaching up to 160 times bigger. Only as a tradable carbon asset on these markets will biochar exercise its full sequestration potential of up to 4.4 gigatons of CO2 by 2050, possibly as high as 20 gigatons if production technology improves. This also represents a significant investment opportunity. The table at the bottom shows the total potential value of the biochar credit market by 2050 at various price points if biochar's full sequestration potential can be realised and supported by carbon finance. $44 billion at its smallest, $2 trillion at its highest. So what are the next steps? Biochar Works has created a complementary task force of organisations to establish biochar as a tradable carbon asset. It's an initiative endorsed by the IBI and includes experienced project and methodology developers from around the world. We plan to target the three most prominent carbon standards, starting with the VCS. Work has already begun, and we aim to have the first standard secured within 12 months. It's really important to note, though, that once approved, methodologies sit in the public domain and can be accessed by all project developers all around the world. So at the same time, Biochar Works has established itself as a project developer and advisor, serving organisations that want to buy biochar carbon credits and projects that want to supply them. This offers opportunities for impact investors to fund and benefit from this work. We're also building a pipeline of projects, so if you're involved in a biochar production project that may be eligible for carbon credits, we'd love to hear from you. So if this is of interest, please do get in touch. I am attending the Q&A session between 1 and 2 this afternoon, but in the meantime, here are my contact details. Thank you for listening and watching.